world. Let's go to Tim Ord. And as we're going to Tim Ord, I'm going to say, hi, Tim. I have got your newsletter right up here, the Ord Oracle. How are you?
Good. Thanks for having me on again. And actually, talking S&Ps, we can start there if you want.
Very good. So, folks, you see this right here, the Ord Oracle newsletter. That's Tim's newsletter. We'll talk about it a little bit more in a moment, but let's get to what he has to say about the S&P. Fire
All
away,
right.
Tim.
All right. Anyhow, this is the S&P's daily chart. Goes back to September. I want to point out a couple of things. I circled a couple of areas there. This is a daily chart, and I got a Bollinger Band on it. And if you get above the Bollinger Band, which is this basically blue area right here, the market's extended on a short-term basis. And a lot of times you get a pullback, and we did get a pullback, actually a pretty deep pullback, all the way back down to this region here. But that was kind of a warning sign. Right now, I'm still long. I think we're going to hit actually a higher high. What I'm starting to look at here, well, we get trend readings. This shaded pink area I got right here and right here are times when the trend reading was above 1.20. And I kind of list them there, point them out where they happen at. Had a couple of here too in this region here, but anyhow, we got support between 674 and approximately 680, give or take. The reason why that support area, trend readings above 1.2 and higher, project panic, and panic only forms at lows. So in general, that's a support area. So we're still in a support area right now. I expect it to rally out, hit new highs in the coming weeks, probably going into Thanksgiving, which is a couple of weeks away, whatever. But on a bigger time frame, if you take this high right there to this low right there, this is a 61.8% retracement of the rally that started from there and went to there. And normally when a market retraces 61% or more of a previous advance, a lot of times you're going into a topping pattern. It may not be this pattern. This may not work this time around, but it's something to watch for. So when we hit a new high, the pattern could be forming what they call is a three drives to a top pattern. And what it is basically three higher highs, and off the second high, the market retraces 6.8% off the second high, and that's what this one did. So if we go up and hit a higher high, there's potential we could do a three drives to top pattern, and three drives to top pattern predict the market will pull back down to the first where the pattern began, and the pattern began approximately around 654 area on the SPY. So it would where's my there it is. Anyhow, it would go up to a higher high than, whoops, this whole thing went haywire here. Hang on. Oh, let me get this back where it should be. Kind of having anyhow, what happened would go back to this low right here, and that's a possibility. So that's something to watch for. And to kind of support that idea, here's another chart on the monthly time frame. And anyhow, what you want to have as the market's rallying, this is a monthly SPY, is basically higher highs as the market's making higher highs. You want higher volume on each high. And in October, which is this one right here, obviously we did go up, hit a new high, and went on higher volume. That's a bullish confirmation to the upside. We're in November now. Obviously, we're not even halfway over yet. And so on this current rally, you want to have a higher high on higher volume. If you have a higher high and the volume's lighter, that reinforces the idea of three drives to a top pattern that we talked about on the first chart. So November, what I'm saying, is a very important month. It has to keep rallying higher and higher volume to keep the uptrend intact. If it doesn't, then we could be possibly going into a topping pattern. And here's an example. Hang on 1 second here. There's an example right there This is back at the February high. That volume is actually a little bit lower than the January volume, and that's the reason why we got the decline going into the October low, because you hit a higher high on lighter volume. That takes the energy out of the market, and you get to pull back down to an April low. So that's what may happen here. It hasn't happened yet. We haven't hit a new high yet, but most likely we will in the coming days, if not weeks. And if we hit that higher high and volume for the month of November falls below the volume that we had in October, and then the whole thing could be setting up for a top of some sort. The market's been up double digits 3 years in a row. Well, I'm counting this year so far as a double. We're up around 14%, give or take. And so if we end up double digits 3 years in a row, a lot of times the next year is a down year. So that's why I'm kind of bringing this up. It's too soon to say if we're topping or not. But before the year's out, either November or December will tell the story, as if the market keeps making higher highs and higher volume, that will be bullish for 2026, but I don't think that's what's going to happen. So there's a possibility we could be topping in here, but that jury's still out. So is that clear, or is that too confusing? Do you have questions?
You've given us very specific, yes, levels to watch. I like that. That's very good. Yes.
Okay, so the whole thing keys on volume. So it could be a 3 drives to top pattern, and for the monthly charts rally to new highs and lighter volume, that would reinforce the idea of a 3 drives to top pattern could be forming. So let's move on to the gold issues. We got more graphs of gold issues. I pointed this chart out last time. Actually, the RSI. Where's my? Yeah,
I should just mention RSI stands for Relative Strength Index. Yes.
Yeah, Relative Strength Index. Last Thursday it was coming in around 20 or so, and I was saying this is a buy area. The middle window is the GDX, or the bullish percent index, bullish percent index for the gold miners index / GDX. It's on a weekly time frame. I use the RSI 10 period, not the 14 period, and when it gets to below minus 25, it got below 20 last week. All right. I'll hold. We'll finish this up on the way back. We've got a break
coming up, folks. Tim Ward will continue when we return. This is Basil Chapman sitting in for Tommy O'Brien. The S&P is up 14. The Dow is up 543. A very strong session for the Dow. Not quite as strong as the S&P, but still pretty good. We'll be right back. Hi folks, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and the Dow's at 564, S&P's up 16. We're on with Tim Ord. I'm going to ask Tim to continue. Tim, what chart would you like to look at now?
This is, we'll do the same one here. This is a bullish percent index for the gold miners index on a weekly time frame / GDX. I just want to point out we're on a buy signal. The reason why this RSI on this bullish percent index, gold miners index GDX ratio got below 25, got around 19 or so. Anyhow, it was a buy signal. So it's now popped up. And we'll kind of do it. You can see it here. This is GDX. Can't quite see it yet, but it looked like a 3-gap play to the downside. What we're probably going to do is go back up to the previous high, which is around 85 area, give or take. That had really decent volume on that high, but that's probably where we're hiding. Are we going to get through that area? Here's a chart that says probably not. This is a monthly GDX chart going back to 2016, and marks the time. I got these blue circles right there, and again, we're currently right there. When you get 100% above the upper Bollinger Band on the monthly chart, that's when the open and close above the upper Bollinger Band. Normally you get consolidations, and we did that on that day right there. And you can't quite see it, but there's another day right there. We did it, and we did it on actually this day right here. We had the open close above the upper Bollinger Band. This is on a monthly time frame, so this is not like a short-term tool. Right. These last consolidations lasted for years. We don't think that's going to happen. This one it gave a top or sell signal in 2000 mid-20, and it pretty much stayed on a sell signal for the next 3 years. We don't think that's going to happen here because I think the character of the market has changed. I think we're definitely in an uptrend. Much higher highs are going to be seen. But what's probably going to happen is we're going to rally up and test the October highs. And the October highs, I didn't write down that volume, but that was a huge volume day. It looks like about, I don't know, 750 million shares, give or take, somewhere in there. It's close to a billion shares. We're not going to probably get through that high. So if you test the previous high on lighter volume, at least 10% lighter volume, that previous high is going to be resistance. So if you can't get above the previous high on higher volume, you're going to reverse and go back down to the previous low. Well, the previous low is this month. So then we test this month on a lighter volume. That would say it has support, and we'll probably flip sideways. So I think that's I think that's probably what's going to happen here. We're going to create a trading range somewhere around between 70 and 85. That was the previous low, is around 70, a little bit below that actually, and the previous high is up around 85. So I think we're going to bounce sideways here for a spell. Maybe 3, 4, 5 months, don't know. But trading ranges are good because we already had the impulse wave here going up, and we're due for consolidation. You just can't keep going straight up. So we're going to consolidate, for several weeks, if not several months. I don't have a time frame, but we're long right now. If we test the previous high on a monthly chart, and we hit 85 range, which is the previous high on 10% lighter volume, I'm going to take my long position off. That's not mean I'm bearish on the market on the bigger time frames. I'm not. I just think there's a good chance for GDX to pull back down to around the 70 level. That's something I'm going to be watching for. So I think a trading range has started, and that's the reason why for that. On the bigger time frame, this is worth remembering. This is the bottom window is the NDX. Middle window, this is a monthly time frame, is the XAU to NASDAQ NDX, and top window is the XAU. And so I did a ratio, did an RSI. This chart goes back to 82, looks like. And it looked like it appears to be a 12-year cycle going on. And to identify the 12-year cycle, when this ratio is rising, that means, excuse me, my throat's getting dry. But when this ratio is rising, then XAU is outperforming NDX. When this ratio is declining, then NDX is outperforming XAU. In 2024, which is the start of that 12-year cycle, the market took off to the upside. The gold issues took off to the upside and outperformed the NDX. And as long as it's RSI, I took a RSI, we've seen this chart before, but this is initiation of an uptrend. And once the RSI gets way above 50, you got up around 70. That suggests this 12-year cycle has kicked in. And what that suggests is that gold stocks will outperform the NASDAQ stocks over the next 12 years. We don't have a lot of examples here because we didn't have enough information going back the last 50 years, but we went back to 82, and I think this cycle is probably going to play out because there's a lot of gold stocks on monthly time frames that gave buy signals, and once a monthly give a buy signal, it's usually at least a multi-month, if not multi-year buy signal. So a lot of these stocks are on multi-year buy signals. So, but on a bigger time frame, as long as this indicator RSI stays above 50, between 50 in general to 70 in general, gold stocks are going to outperform the NASDAQ stocks. So that's the reason why, getting back to this chart, that's the reason why I think this is just a sideways consolidation that may last, it's hard to say, several months, possibly first part of next year, before it starts off to the upside again. So this is not a top like these other two ones, 2020 or 2016. I think this is just a sideways consolidation. And a lot of these gold stocks, especially the small ones, I think are going to come to the forefront. And the big ones like Murak, Newmont Mining, AEM are going to consolidate over the next several weeks or several months. Then maybe later next year start going up again. But I think everything's going to, I think this is like 2000 again for the gold stocks. And so far, the information I'm getting, and this is one of the reasons why I think it's a 12-year cycle beginning, is because the RSI is the first time in the last 12 years they ever saw 70. So last time we seen 70 on the RSI is back in 2000. So it's a long time ago. So anyhow, gold stocks I think is where to be. I showed one gold stock or a couple of them last time.
Right. Yes.
Yeah, I like this one, Western Haven Gold Corp. The reason why I like this stock because he had a sign of strength.
This is on the Toronto Exchange, right?
Well, this one, the WTHVF. This is on the American Stock Exchange, so you can buy this. The symbol here is WT.
HVF.
Yeah, VF. It's on a monthly chart. So this is actually a monthly chart on the American Stock Exchange. And we had a sign of strength, which is a huge one. If you notice, that volume was just gigantic going through the mid-Bollinger Band, and that was your trigger to buy it. So this was on a buy signal. A lot of times, there's a chance we could possibly get back to the old highs, which is up around $1. 10 timer. It's a possibility.
That's amazing. This is a stock at 13 cents, and it actually hit 18.5 cents just the other day. Big percentage moves. Hey, Tim, thank you so much. The Ord Oracle newsletter. This is Tim Ord. Muchly appreciated every week, Tuesday and Thursday. Thank you so much for being here, Tim.
All right. Thank you.
Thank you.